Another crunch day for the Eurozone. Moody's threatens Germany's top-notch rating. Outlook negative, along with the Netherlands and Luxembourg. Spain facing a major test of investor sentiment with a short-term debt auction after yields pushed to fresh record highs. And international lenders return to Greece today on a make-or-break visit to decide on a 130 billion euro lifeline. French and Spanish PMIs trickling through now. German and Eurozone PMIs out a little bit later on. Let's get straight to Mike Ingram, BGC Partners. Morning to you, Mike.
Morning,
I want to start with the Moody's news. This rating action goes against the way the market has moved. What's going to happen in the market on the back of this?
Well, I think it's usually taking that these ratings agencies are a long way behind the curve. I mean, I was actually reviewing some of this data last week. I mean, if you look at sovereign credit default swaps, I mean, Germany, the spread has been grinding up there quite consistently for the last year or so. So the credit market's certainly been saying that German sovereign debt is actually fundamentally riskier. And, given the trade and financial linkages that Germany has within a shaky Eurozone, that probably shouldn't come as any surprise.
Are you guys taking bets on when the ECB is going to step in?
I don't know about bets technically. I mean, yeah, they've got to do more. I mean, it's quite clear. I mean, my read of what the ECB's been doing, in a strange way, they're applying the same sort of pressure on Eurozone politicians as the Troika is going to be, applying to Greece today. They're saying, well, hey, we could do more, but actually this is largely a political problem, and we're going to sit on our hands and force your hand.
And what you mentioned the Troika in Greece. I mean, is the worst news largely priced in? And again, how do you as a market practitioner play that now?
Sorry, in terms of playing Greece?
In terms of playing Greece, in terms of playing the general Eurozone story now in the market?
Well, I mean, my view is that there's going to be no durable recovery in risk assets, so in credit, in high yield, in equity, until there is some resolution on the Eurozone crisis. That actually means a lot more action from the ECB. It could mean, in terms of proper QE, which they're not really able to do at the moment, and also a credible plan towards fiscal union. It's full fiscal union. In terms of Greece, I mean, I think it's just one to avoid. I mean, we've seen some big rallies in Greek banks a couple of weeks back, and we were just looking at it and thinking, well, this is defying gravity. Quite frankly, the way you play Greece is to probably go out and do what everybody else in the market is doing and shorting sovereign bonds in places like Spain and Italy.
Yeah, Mike, thanks very much indeed. Pleasure. Top world news story on Reuters this morning. Western states alarmed after Syria acknowledges for the first time it has chemical and biological weapons. Damascus says it could use the weapons if foreign countries intervene in Syria. US President Barack Obama warns the world is watching and Syria will be held to account. Right, let's get to Asia and China launching its biggest foreign takeover bid so far. Reuters' Lisa Yuriko Thomas in Hong Kong has this story. Lisa, China paying a big premium, it seems, for Canada's third biggest oil company, Nexen. Is that the general consensus there?
Yes, CNOOC paying a hefty 61% premium for the Canadian oil producer. By buying Nexen, CNOOC will boost its proven oil reserves by about 30% and begin building its North American business. But CNOOC shareholders aren't too happy over here. Shares are down about 4% today. Analysts say the all-cash deal could reduce China's external surplus and could be negative for the yuan in the medium term. Also a surprise that such a monster deal could take place so close to China's leadership change that we expect later this fall. Now everyone is waiting for Ottawa's response, but insiders say there's a pretty good chance it'll go through. All
right. I want to get back to the economic data. I guess some positive PMI numbers out of China this morning.
Yes, I mean, China's manufacturing sector looks to be picking up pace and clawing its way back towards growth. That's according to the latest HSBC manufacturing survey of small and private firms. The survey rose in July to its highest level since February, but it still remains below the 50 growth threshold. Analysts say Beijing's pro-growth policies are starting to work, but don't celebrate just yet. Jobs remain a big concern, with the employment sub-index falling to a 40-month low. Remember, China needs to absorb millions of new graduates and rural migrants every year, so Beijing isn't off the hook yet. Axel?
All right. Lisa, many thanks. Another busy day for corporate numbers. Among the big names with earnings today, Apple, DuPont and AT&T. And still to come later in the week, Boeing, Amazon, Shell, Anglo American and Barclays. Here in Europe, the world's largest business software maker SAP defying the gloom in the tech sector. Sales up 19% in Q2 and a stronger than expected rise in profits to 1.17 billion euros. I just chatted with the SAP co-CEO Jim Hagemann Schnaber. You can find that interview on Reuters.com and the Insider platform. On this day in history, in 1974, the U.S. Supreme Court ordered the then U.S. President Richard Nixon to hand over tape recordings in the Watergate affair relating to a break-in at the Democratic National Committee HQ in Washington. Days later, Congress decided Nixon should be removed from office, but he resigned before he could be impeached. Finally, just in case you hadn't heard, the London 2012 Olympic Games open this week. Our picture of the day shows the Jamaican track star Usain Bolt posing in front of a traditional red double-decker bus. Bolt, of course, is defending his 100 and 200-meter sprint crowns. I'm Axel Threlfall. This is Reuters.